Good morning.
Good morning.
Every- Good morning. Good morning. I am April Brown with Zelken Financial Services, LLC, and I'm back. The tip, today's illuminated point. So today we're actually talking to a colleague of mine, Roger Kubitz, who is with Trusted Insurance Producers. And I'm going to ask him a series of questions for those of you who are interested about healthcare insurance, because Roger is the guy. Well, in that arena, because I could care less about that shit. I mean, this I call him. I'm just saying. So I'm going to turn it over to Roger because I want him to give a little background about who he is, his business, how long he's been doing this. So, Roger, it's on to you.
Hey, April. Hello, all of April's fans. Name is Roger Kubitz. I have been in the insurance industry for just over 26 years. Majority of my business has been on individual, group, and Medicare supplements. Really, that's it. What type of questions do you have in regards to health insurance? Because there's a million.
So let's get started.
All right.
So first off, I want to know, why the hell is health insurance so damn expensive?
Well, that could get into a political debate, really, based on what happened back in 2008 with Obamacare getting placed into the system. But overall, it comes down to what the hospitals are really charging for everything that you could possibly go in and have. There are 10 different companies doing the same thing, and each of them keep raising their price to be the best. That is truly the reason why health insurance is going up and up and up.
Okay, wait. You're raising your insurance prices to be the best. That doesn't equate to being the best.
Well, in the mind of the American, something that costs more money in their head is the best. Now, that doesn't mean that they want to buy it.
Okay.
But that in the mind says that they're the best, which is completely, I'll go with baloney.
Yeah. This is a little bomb. Like for health insurance, I mean, I want good quality health insurance, right? But I don't want to look and see that my paycheck is taking another like hit out of it just to pay for that. And even when I was working, I was glad I didn't have children or a husband, because we would have been asked out. Because I'd have been like,
Yes.
honey, you
Yes.
got to do the plan. Is yours cheaper than mine? And so, it's that kind of, is yours cheaper? Is mine cheaper? Who's cheapest between
Yeah,
the two of us?
interesting. So you say that about and you're talking about group insurance.
Right.
It has never made sense to me, but if you are on the group policy, you're very affordable and you have pretty good insurance. But if you
Right.
have a husband and children on the policy also, that price is way up here. Why? I don't know.
Oh, wow.
There really is no answer for that. In the
Okay.
individual world, I still love the options of being able to put together a plan that fits your needs. I have no reason as an individual, I am married, but if I was single, to have maternity. I know that's the talk out there right now, but I cannot have a baby, and nor do I want to.
Roger, if you did, we'd all be rich.
Yes. You know what? I don't even care about the money. I don't want to have a baby.
All right. So my next question for you is, why are companies better than others? Why are some companies better than others? So I think about when we left like one particular health insurance company and went to another, and we were like, ooh, they're not that great, because it was a whole lot of rigmarole in terms of getting stuff done, getting your, X, Y, and Z. It was a lot.
Yeah, there's a number of companies out there that they've, how do I say this? Their policies are not as good, and unfortunately the prices have gone up so high that these groups are signing on with companies that have inadequate coverage.
Okay.
It comes down to that, because if
Okay.
you want truly the best, now again, it goes back to what I said in 2008 when everything changed.
Right.
Everybody's deductibles are massive. Everybody's max out of pocket are massive. I mean, if you look right now, if for an individual or a small family, $7,000 minimum deductible, $13,000 max out of pocket, you're $20,000 out of pocket right there before
Right.
you have any coverage. So all
But
these people that have free insurance, nobody has free insurance.
right. Well, the thing about it is, if you're out of pocket, I mean, hell, if you got to pay that out of pocket, people can't even afford to spend. I mean, if they get a $400 emergency, they're saying that is difficult for people to take care of.
Yeah. Good luck on a $400 emergency though.
Right. But if you got
$4,000.
right, but I'm not talking about the medical. I'm just talking about something else that breaks down. And if
Yeah.
it's a $400 emergency, people don't have the money to tap into that. So if you have a medical emergency, how are you going to tap into $7,000 out of pocket?
Right. The only safeguard that people have when they have insurance is the deductible, because in most states, and I'm only going to say most states because I'm only licensed in 26, 27 states, most states, the deductible in the hospital, there's a law that says they can pay that over a 30-year payment plan.
Wow.
Now, that was fantastic before 2008 because I can get my clients to go on a 5,000, which was huge back then. Now it's tiny, $5,000 deductible, knowing that if something happened, they can go on a 30-year payment plan. But I have their premium like this. The whole
Right.
deal of why I sign up people, and I tell this story, and some people say, don't say this. Some people say this. You know what? I'm no BS type of agent. I got into this industry because it's residual. Residual means that I get paid every single year that you stay on the policy. My job is to get you on the lowest premium I possibly can with the best coverage because I want you until you're 120. Bottom line.
Right. Right. Get that.
So the
Okay.
only way to do that is individual policies that you can put together.
Okay.
Piecemeal a policy together. All those policies out there that they quote Obamacare, that's not a piecemeal. That's a full coverage, and Mr. Yoo-hoo, you're getting maternity.
Okay. So let me say this. So for what you do for clients, because actually talk about what you would do for a client such as myself. So let's say I come in, I'm working, but my job doesn't necessarily offer healthcare that healthcare insurance because for whatever reason, and
Right.
I'm looking for healthcare insurance. What do you offer me? What
Okay.
do I do? What happens when I come talk to you? What does that look like?
So first, most often when you are a person that is not getting offered insurance, you're in a company that's under 50 employees. Most over 50, they're going to cover. With mine, I have everything. I have Blue Cross, Humana, United Healthcare, Fortis, Golden Rule. I have everybody. I'll see what your situation is. Really, it will come down to what is in your medical file. What am I going to see? If I had a crystal ball, what is in your medical file? It's the MIB, Medical Information Bureau. Everybody can order their report to see what's in their file. And I tell you, all of my clients order the report. I order mine every 2 years because I am a junior. Years ago, this is probably 15 years ago, I went in for my prescriptions. I got my father's.
Okay.
Order that report so you can see, because there are just like your credit history, there's discrepancies.
Oh, I never thought about it.
Once I have that information, now we can move on to, okay, you have a pre-existing condition that some companies are not going to take. We're going to have to go to an ACA, affordable, non-affordable care policy.
Okay.
But then I have other plans that are, like I said, piecemeal, no deductible unless you're hospitalized, no copays, no coinsurance, and you're putting the plan together how you want it to fit.
Okay.
That's how I work it.
Okay. So who generally comes see you? Are there people who are just they don't have it? They're working and they don't have access to insurance, or or is it going to be your entrepreneurs or your solopreneurs? Who's actually coming to talk to you?
Those are the people that I mostly have. Honestly, I will sit down with everybody. I have someone that is a teacher. They obviously can get government coverage, but because, and this goes back to what we said before, her family, 4 kids and a husband, the policy was ridiculous. And
Right.
she did not want to be on a separate policy than the rest of her family. We
Right.
wrote them up. She said no to the insurance for a teacher, and she got more money.
Right.
She's
Well,
not paying for the insurance.
it never thought dawned on me that, that was a possibility or that was something that you can do. I was a single person. So, half the time I never paid for a number of years. And then eventually begin to pay, for my insurance. And then now that I've retired, I do have insurance. Fortunately, unlike other people, they're never going to get that, because a lot of municipalities have phased that out. So, after a certain point, it's done. So actually 2008 was done. So if you came into the police department in 2008, you were not going to get insurance in retirement. You're on your own. Now they're doing something to, offset that. But I mean, what's 2% in the scheme of things, really?
They had an insurance company come in, contract with them. The pension or the company is not going to pay them, but that person will help the retirees.
Right. And so you can get the money at the end of your retirement and do whatever you want to do with that to offset. And so I do have a question on, just as a lady who's into her 50s and 60s are not too far down the road. Question about Medicare and Medicaid. I am going to ask, do you have to have it?
So you're going to get a government portion of the Medicare. That is going to cover roughly 80% of your bills.
Oh, okay.
Then you can go 2 routes. You can go Medicare Advantage. To me, and that's going to cover another 80%, but it still leaves an opening.
Okay.
I will not sell that. I do not have Medicare Advantage. I have people that I know. I will send you off to them. They're fantastic, but I do not like the fact that my clients are still going to have a gap there. So I have Medicare Supplement. There's 3 things to remember about Medicare Supplement. 1, Medicare Supplement, everybody has the same policy. So everything you see on the radio or on the TV, no, they're not the best. Nobody is the best. What it comes down to is premiums. And my number one thing is rate increases. For the past 17 years, I track every Medicare supplement company that I have, and I have all A+ rated companies. I track all their rate increases. So I can get, and I'm not going to out any companies right now, but I can get one company that's going to save you $10 a month right now. So you'll save 120 for the year. And then I have this other company that I love. This company I know is going to have 17 to 23% rate increase.
Oh, wow.
This company is going to have a 6.
Okay.
If you get a pre-existing condition, a bad one, on a Medicare supplement, you won't be able to change later. That is not an open enrollment. I know open enrollment is a big word out there.
Yeah.
Not when if God forbid you come down with a pre-existing condition on a Medicare supplement, you're on that company. So why do I look at rate increases? Because I don't want you to be at $600 when you're 70, 75. I want you to still be here. You're starting off at maybe $100 to $125 when you turn 65.
Right.
You're not going to stay with this if it's $600 later on.
Right.
That's not my job is to keep you as low as possible. So not only am I going to look at the premiums, the rate increases.
Okay.
It's huge.
Okay. Okay. So I've got a couple of examples. So for instance, if you are a business owner and you've got 50 employees or less, how do you offer health insurance for your folks? Or what should they be thinking about or considering when they're looking at healthcare insurance or health insurance?
So 50 or less, I do one of two ways. I will show them individual rates for each individual, and then we'll talk with their accountant on how to write that off, that portion that they're going to pay their employee.
Okay.
But individual, what that does is now the employer, if they were to let this person go or they were to quit, they take the insurance with them. No COBRA involved.
Okay.
Or we can look at the group. More often when we have people that have pre-existing conditions, we have to look at the group. But you lay that person off or they leave the company, you're going to cover them for the next 18 months under COBRA.
Okay.
So I have both routes to go.
Okay.
It just depends on what are we looking at. I have one that has 46 employees. We have just about half the group on individual plans, and they reimburse them the amounts,
Okay.
which saves them money because the individual way is a lot less than the group way. Especially you need to be at about 200 employees, 250 employees to really start seeing a savings in regards to premiums.
Okay.
These small companies, the group it's just killing the small companies. The premiums are too high.
That's why you don't see the offer, and it's kind of like figure it out for your damn self. So tell everybody what the hell COBRA is, because
COBRA, you are retiring or not retiring. You quit your job, you got let go, something happened at your job, and they need to cover you for an 18-month period, which is basically a free area to go and find something better because COBRA is not cheap. It's actually more expensive than the ACA or quote Obamacare.
Okay. Oh wow. Okay. All right. And then
and the business still has to do all of the accounting during that 18 months. So the business fired you, but they're reminded of you every month when they pay the bill.
The next 18 months. Wow.
Yeah.
Okay. All right. That's very interesting. I'm learning something new. So I came across a company. I was talking to a lady somewhere out, and she was like, our company pays you your premiums back and so on and so forth. Why don't you look at them? And this was like right as I was transitioning out to retirement. And I was like, girl, I get it. I got insurance. I mean, really. And she was like, well, this is really interesting and you should think about it. I'm not going to name the company, but I told her, I said, okay, sure. I'll think about it. And then I actually researched and I was like, what the hell is this? So I'm asking you, are there companies out there that do that? And what does that really mean? Like when they give you your premiums back and a percentage back, so on and so forth.
So I don't know I am not contracted with any companies that are going to return your premiums. Now, there are life insurance policies that you have return a premium. But in the health insurance world, I would stay away from those type of companies because how would they possibly be doing that?
Yeah, I don't know. It was a glance. I looked at it. I didn't, I didn't.
Now I do have a company that it's called a defined benefit plan, which means that we can't call it a major medical.
Okay.
But it's a defined benefit plan, and it is going to cover you up to, let's say that for doctor's office, it's going to cover you up to $180.
Okay.
If your doctor cost 80, you still, because it's a defined benefit plan, you still receive the 180.
Okay.
So that is, I guess, one way of giving your money back.
Okay. And I
have one client that loves his colonoscopies.
Oh, okay.
Calls me every year to let me know, hey, I'm going in again, because he makes about $1,300 off of it.
That's terrible, but that's funny.
Unbelievable. It's the worst phone call of my year.
So I probably have the terminology wrong. So I'm full disclosure, I probably have the terminology wrong. So I just thought it was premium because I was like, honey, I don't remember. She was telling me something, and I was like, okay, whatever. And it was like in one ear and out the other. And then she gave me paperwork, and I looked at it, and I still don't remember exactly. But I was just like, I thought I'd ask.
It could still be out there. I can tell you that in my 26 years, I am not contracted with any companies like that, nor will I unless they really do a great sales.
Yeah, and you're probably right. It's probably the what you just said, the benefit premium, blah 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 blah.
Yeah,
See, I'm
benefit
still
premiums, yes.
we talking. So, well, that is all the questions I have in reference to that. But I will say, please, if you're interested in what Roger's talking about, you can always reach out to April Brown at Zelken Financial Services LLC. You can go to my website, which is www.zelken, spelling ZELKEN, financial.com. And if you hit me up, I'll get you Roger's information. Or Roger, you can give him your website your damn self. Go ahead and tag that.
www.tipusa.org. TIP is Trusted Insurance Producers, and we're in the USA. TIP.org. TIPUSA.org.
Yes. All right. Well, thank you, Roger, for being on with me today. I hope you have a fabulous rest of your day. And I'm April Brown with Zelken Financial Services LLC. I hope you got something out of this and have a good day. Thank you.
I appreciate it, April. Thank you.